Hi friends, welcome back. Let's take a look at Tezos versus the dollar and Tezos versus Bitcoin. I've got Tezos versus Bitcoin up behind me at the minute. I'm Rocky Outcrop. This is the Rocky Outcrop channel. We do daily technical analysis for crypto. We do it without any FOMO, without any greed. Today's video is going to be a shorter one because, everything I've expressed over the last week while still remains absolutely the case, and I highly encourage you to go and watch the previous videos, although I appreciate the fact that you might feel that they've expired in the sense that they're yesterday's content, but the information hasn't changed, and I'm going to just kind of underline that point by keeping this video quite short today. There's volatility in the Bitcoin market because the biggest single fundamental change that can happen in this entire industry has happened in the last 24 hours, and until such times as the actual proper boundary, the end boundary of that event comes into play, we can't say that things are priced in, and we can't actually look towards trends and everything else. It's just volatility and uncertainty in the market as people are getting washed out in the meantime. There's trades to be had here, overall. We're looking at 2,700. This 786 retracement as being our support line. We're happy to see the prices above 2,800. We really want to see the prices move, above 3,000. But in the meantime, those are our kind of boundaries at 3,000, 2,800. I want to go above 3,000 and move towards the top side. But until such times as we're kind of really broken past the 618 retracement, on this particular Fibonacci again, and established ourselves above that, then there isn't particularly a great deal of things to be said about the price action currently. And I can underline that again just real quick with another Fibonacci. Now, I'm not, again, I say this in every episode, I'm not Mr. Fibonacci, but it does help. It does help in terms of kind of drawing a couple of points on. I think it's a very good analog for people to use, to be able to see where we are. And such times as we're below the 3,000 area, we're below the 236 on a retrace from this area, and this is an invalid Fibonacci until such times as we've moved above 3,000. And there you go. That's why I'm talking about that one. Going over to the dollar prices, and you can see we've got this downward channel area that we're still inside. That's good to see that we're still inside it and we've not broken out of this yet. Discussing the possibility yesterday of whether or not this could be some sort of like broadening wedge of some sort, but it's a bit much really to say that, but it could potentially be if you put it like that somehow. It certainly isn't condensing towards it, it's not contracting, so it's not a falling wedge, so it isn't that inherently bullish pattern in that sense, but it's a broadening one, and perhaps perhaps this is a continuation type pattern, perhaps, but we need to see things happen in terms of the prices, like going back above our previous sort of lows for a start at 265, moving up towards 270, then going towards 290 and things like that before we can start getting bullish on it. The fact that the prices are remaining above the 230s area and 240 area is what we want to see. As we can see here on this chart in the 24-hour time frame, that we've had the prices come back down underneath that 230 area that we've spoken about for so long, in terms of being able to get back in again if you wanted to long it and you felt like you'd missed out on some move, you've missed out on the price action as it moved up past this point. We're always aware, we have been through its entire period of time, that it could come back down to 230 again, and in fact it could still even go down to $2 or 215, without us particularly necessarily changing the macro structure of things, as you can see here, where this low is. So we don't need to get too carried away in terms of either bullish or bearish thoughts on this thing, but certainly opportunities that we were waiting for since April until for like 20 odd days there or whatever have come to fruition, and that's decent enough to see in terms of patience being rewarded there with a what discount? A discount of what? Let's just see, a discount of a solid 20 to 25% discount on your purchases if you were being patient. So that's good to see. Over here at BTC, where we have this line drawn in at 258, we know that that's sort of a crucial area for us, so we're going to be keeping an eye out on that one. In terms of this being more wedgy, or more in some other sort of a shape, I don't think overall these lines are particularly useful at the minute. Really just looking towards this 230s area, as will it be support? 250, can we break above that again? Can we get back into this overall upward broadening wedge shape here? And we've got this resistance up above us at the minute is at 254. We can look towards the 258, 260 area as being the crucial part of this movement, and then 270 thereafter on this one. So that's kind of all we have to really say about it. Thanks so much for tuning in. Do these videos daily, pardon me. If you're interested, it's still just not any divergence here on the oscillators down below, and they're still just going down the way. Is that part of resetting so it can go up higher without any divergence, or not? Well, it all depends a bit whether or not you can stay above 215 in a sense in terms of the lows here, or if you want to be more sort of clinical about things, or whatever, will we stay above $2? But that's but in the meantime, you can look to 235 in terms of managing risk and 258 in terms of managing risk as well. There's profit to be made here if you're trading in the meantime, and that'll just have to do. Thank you so much for tuning in. I'm a little bit more somber in the video today because I just want to really underline the point that there's volatility in the market, and I want to make everybody, I'm just as happy as I was yesterday, so don't worry about me at all in any way, please don't. I'm doing this on purpose so that you understand that there's volatility in the market currently, and until such times as the fundamental boundary end of that event has actually been underlined, then I'm just going to talk like this a wee bit from time to time just to emotionally, impose that emotion on you so that you go, hey, hold on a second. Anyway, you can see that there's this yellow line coming in here, which is a 29 EMA. I use 29 at the minute because it includes the weekends. I would use 21 if I was trading in traditional markets, and 29 includes the weekends. That's right at the top of where we are right there at the 250 area. So, if you want a target, there's one there for the first off, 258 thereafter, 230 down below. Thanks so much for tuning in. I've been Rocky Outcrop. We've been Rocky Outcropticians. Please subscribe, do these videos, content daily, and all the rest of it. So I really appreciate it, and let's try and grow the channel up to 1,000 so I can get weekends off, because that's what I'm looking forward to now. Thanks so much. I'll catch you next time.